Hadn't even turned the microphone on. I apologize. Well, hello, my YouTube friends. I hope everybody's having a good day and a great Monday. Markets seem to be doing okay. Before I forget, let me do my little disclaimer. As always, nothing in the video today or nothing in the content is financial advice. I am not a professional financial advisor. You guys need to do your own research, reach out to a financial advisor, and you shouldn't be listening to me or anybody on YouTube for any financial decisions or investments you guys do. Well, hello, Lily. I'm glad you made it so early. Let me take a quick look here and see what's going on. It looks like Nasdaq's fallen off a bit, and the S&P, they started out pretty good. Dow's barely holding on, which I don't love to see for short-term moves because, to be fair, market was up really big yesterday, started out looking great today, and seems to be reversing a bit at this point, which is not a great short-term type of view. But happy Tuesday to you as well. But part of why I talk about having a diversified portfolio is I just kind of popped open out of curiosity my set it and forget it account. And what I notice is on days that the Nasdaq is struggling, the things that are defensive seem to be doing just fine. And on days that the defensive stocks are struggling, the more aggressive stuff seems to be doing just fine. Um, Interesting to see. I was kind of excited. It's in my son's account. I have a small account that I put about $50 a week in his account, and he is a big fan of Spotify, so he wanted to put a little in there. It's a tiny amount, but it's still exciting and nice to see. Because that's the type of thing. I mean, Spotify. Let me take a look. Last I looked, was up over 10%, and I mean significantly. I think. Yeah, it's up $66 today, which is kind of cool. It's a tough company for me. The only reason I have it in his account, not mine, is I feel like, well, it wasn't so terrible, I guess, if I look at like I'm old person and I constantly look at PE valuations, and even after falling from the year high of $785 down to yesterday, it was at like looks like it closed at I don't know, 415 bucks or something. It was still a 53 times price to earnings ratio. Maybe they're growing fast enough to justify it. I guess when they came out with the earnings, they noted how much their daily users were doing, and it was extremely good. So the shot has shot up. Nice to see it up so much. Wish I actually had a legitimate position, but I get excited about that stuff mainly because my goal is similar to what I say about the channel and all of it. My hope is to get young people interested in saving for their future, and even if it's just a little bit of money, if I can show him how much things can go up and he gets excited about it when he gets a little bit older and starts having a job, my hope is that he gets in the habit of taking a little bit of each of his paycheck and putting it away for the future. Now, I mean this totally honestly. I don't care if what he puts away falls in half and when he gets older, it's less than what he put away. It's a little of where I go to. I don't want people worrying about the financial advice and not listening to me and doing their own research, mainly have. Did it cut out? Is anybody there? Yes, I apologize. I was getting a phone call. Hopefully, it's caught itself. I didn't want to hang up on it because when I do that, it seems to freeze the screen. And I am not a YouTuber per se. So it's not like I have a setup or anything else. I just use my phone. So if I get a call, it kind of screws things up. Anyway, the reason I get excited about that stuff um, is because what I hope for him is what I try to say about everyone and my goal for the channel. Like my goal of what I hope for anybody who watches is I hope that people get excited about the idea of saving and putting away for their future. I don't worry so much about the ups and downs. And maybe it's a bad investment, maybe things go down. But my point is, if people get in the habit of saving for their future, even if they put away $10,000 and it ends up only being 5,000 in the future, I would rather them have that $5,000 than zero because they're just spending their paychecks and living off of whatever comes in. And understand, it's all in comparison to everybody else. So if your account dropped from X to half of X, so did everybody else's, which kind of leaves you in the same position, even though mentally you won't feel that way. I know that sounds so stupid, but it's similar like if houses go up or if they go down. People, in my opinion, get overly uptight. Like that's not the, I don't want to use a negative word, but they get overly concerned. Concern's a better word. They get overly concerned with the valuation of their property or whatever it is. The reality is the house that they own is the house that they own. It's very hard, like we compare it in dollars, and for whatever reason people feel better when they see the valuation go up, but it really shouldn't matter. Somebody should get into a property, if they're getting into it, that they can easily afford, that they're not worried about paying the bills, and that they're not overstretched, because there's nothing worse than pressing too hard, feeling all of that stress on top of your normal work stress and daily life stress and everything else, on top of if you've stretched too far and now you have payments that are difficult to be able to make. What I encourage people to do and what I hope for is they put away and save and never push the limits too far, which maybe they don't get as wealthy as they hope one day and you have to take some risk. But I'm a pretty conservative person, despite, like, I don't know how many people viewing now know my background and how I got started in this stuff and everything else. I've been a professional investor slash trader going on over 30 years. When I graduated college, I wasn't 100% sure what I wanted to do. I interned at Merrill Lynch for a bit because I kind of thought maybe I wanted to be a mortgage, not a mortgage, a stockbroker. The only thing I learned by volunteering or interning at the Merrill Lynch office is I knew that was what I didn't want to do. Like I went in, my concept, like most things, part of why I do the channel, I think of myself as a teacher of sorts, and I like helping people if that's possible. Um, I, Either way. So my thought was I liked finance. Maybe I could go learn more about stocks and investing and find clients and help them to grow portfolios. I go in an intern and I'm doing a bunch of stuff that isn't very interesting. One of the brokers kind of took me under their wing, so I was working for her and this other guy, Dave, and basically what I started to see is they didn't do any of the research. Their whole job was sales, which, don't get me wrong, I'm okay at sales. I have no issue with it. But that wasn't what I was hoping to do or what I thought it was. So when I went in and essentially the salespeople or the brokers, forgive me, it's like every Tuesday he calls. It makes no sense to me. He knows I do the live. Um, so I, they just put a memo on the broker's desk of the things to call their clients and sell. Not only did they do that, like the brokers weren't even allowed to do additional research or find things that they wanted to suggest because the company didn't trust them enough to do good research and suggest things that they were comfortable with. So they really had to sell whatever product it was that the brokerage firms was suggesting they sell. Well, that was so not what I wanted to do. And the only thing I learned when I interned at Merrill Lynch is, geez, what I thought I wanted to do when I went to college is so not what I wanted to do. So I went to school and I ended up confused by the time I graduated as to what I wanted to do. Now, very long story, like the opposite, taking a short story and making it long. Well, when I graduated, trying to figure it out. I figured I'd take the summer off, not sure what I want to do. talked with my brother who had moved to Chicago after going to college, and he and I are kind of similar in the things we like. And he was like, dude, you need to come out to Chicago and see what I've been doing. He was working at the Chicago Mercantile Exchange. He was a clerk down there in the currency quadrant, and I went out and I just fell in love. Um, so, real quick, because I see the comment, Lily says that she's been teaching her kid to save and invest and agrees, which the younger the better. You know, there's an old saying of time in the market is more important than timing the market. And I can't tell you from my experience how true that is. Now, if you can buy things cheap on top of it or on discount, I think that's even better. But the longer you put things in the market gives it that ability to compound and grow over time. Anyway, back to my rambling about the background. So I moved out to Chicago, didn't know anybody, went down to check out the floor. And when I tell you I just fell in love with it, like I compare it to my first time walking onto the exchange, felt like my memory of like Caesar's Palace used to have this moving sidewalk going into their entrance, and you kind of go in the grand big casino and you get in, and it kind of took you through the sports book back then. Now, this goes back a long time. Even living out here, it's not like I get down to the strip too often, and it's way different going into Caesars now, and the entrance isn't the same. But it would take you through the sports book, and there were all these TVs and lights and people making noise and everything else. My first time walking onto the floor of the exchange was the same type of feeling. It was so cool. There are all these people yelling and screaming and running around and numbers and things all over the board. Like, I understood stocks, but this was in the currency quadrant, and I could read like Japanese yen and some of the other stuff to have some random idea of what was what, but I didn't know what was going on. It was just super exciting, and all that noise and everything else. So my fortunate enough, my brother and I both worked jobs. Both of us actually started working two jobs, putting away everything we could, because our goal was to save enough money to back one of us. And then if that person was doing well, we would hope to make more money and put up money to put up the second person. Well, we had finally saved enough money between the two of us, and we were really putting away like, I don't know, 30% of whatever we were making at work into an account. And since he was older and he was down there first, he was going to start trading. And while he was going through the classes of getting it was called a badge. Like you get this. I still have mine. It's kind of cool. I have my jacket. I don't know if I have my jacket. Either way, when he was going through the classes you had to go to, which are only like a month or two to be able to trade to get his badge, well, he was approached by somebody to actually back him to trade. So I get a call and he's like, hey, you want to start trading? And I'm like, what are you talking about? Because I knew that he was preparing to go in. And he goes, well, and he starts explaining this guy, John Stafford, who backed a lot of traders, had given him this opportunity where he would put up the money and they have a split, and he could go into the pit and start trading, so that the money that we had saved for him we could use for me. So I was like nervous and excited all at the same time. um, and then from there, the next thing, I start going through the class to get ready to trade. And man, I probably only worked at the exchange about a year from the time when he said, why don't you start going through the class to get ready to trade? And yeah, the class is only a month or two, so maybe a year and a half after starting as a runner at this exchange, there I am, nervous and new, walking into the yen pit to trade. And the funny thing is, when I think back, part of the best thing about going into the currencies was knowing nothing about them. If I had gone in to trade the S&P futures or something, I have my opinion of the stock market, and I always think it's going higher, just so you guys know too. So if I went in to trade the S&Ps or something, I might have been much more stubborn than I was by going in and trading the currencies, since I didn't really have an opinion or think about them much. I was much more, what's the word, fluid. I don't know if that's the right word, and I don't want to use that word with the connotations that it has in today's word. But I was much better at just moving with the market and adjusting to what was going on instead of really having an opinion that I just think stocks are going higher. And thank God too, because down when I went down there was the late '90s or early mid '90s when I started trading. The dot-com bubble came around and the market sure collapsed. I was actually, the Nasdaq became a very busy pit, obviously, and I was trying to go down there every now and then. Oh, Michael Saylor's talking. I heard it was kind of a joke. I'm going to listen a little bit in the background. I hope you guys don't hear it, but I'm kind of curious because maybe we talk about it a bit. Let me turn it down so it doesn't. Um, if they have him go on again, because I heard he made some comment that he could refinance at any price, and when he was asked about where, his response was like, "Oh, I could do it anywhere." And that meaning if Bitcoin fell, I think the price they used was 8,000, and I thought that was kind of a humorous answer when somebody told me, because I find it hard to believe if Bitcoin fell to $8,000 that Michael Saylor could just refinance his loans anywhere, because I'm guessing that the investors wouldn't be real thrilled about that. Either way, um, so uh, trading was amazing. Computers really changed it over time, which is why we all trade on the computer now. So Lily's asking, for those of you who don't see in the comments, about Duolingo. So let me take a quick look, and I will tell you my opinion on Duolingo, because it's actually one I watch. I don't know if you guys watch Joseph Carlson, but I really like his channel. And he recommended Duolingo a while back. And part of why it's a good one that you're asking about is it's an example of a stock that I am down good money in. It's trading right now $122 a share. Um, let's see. David, I'll read the question and get to that in a bit. Let me go over Duolingo real quick. Um, Or you know what? I'll answer your question, then I'll go back over Duolingo, because they kind of go hand in hand. Because I own Duolingo for much higher. I bought it at around 200 or $210 a share. I don't remember exactly, and it's trading 122. I added on a tiny bit recently, but to answer, so David is asking, every time I go to buy a software stock, I see all the sell orders and decide to wait. Any thoughts? Whether it's software or anything else, you have to decide if you're buying something as an investment or as a trade. They kind of go hand in hand, as I know that that's kind of like a little nuanced. And what do I mean by the difference? But what I mean by the difference is, if you're investing in a company and you think it's a good valuation and you're wrong, that's okay. Your time horizon should be 5 or 10 years. And if you look at like Warren Buffett buying Coca-Cola 30 or 40 years ago, would it really have mattered if he spent $10 a share more or not if he's holding it 5, 10, 20 years? So I try not to be too sensitive to some of that if my time horizon is long enough. Now, if I'm thinking maybe I can make a little bit of money and it's a trade, I'm very cautious about the valuation right now. So, me personally, if I think it keeps selling off, I wait. But there is a point where something will turn and it becomes very hard to trade if you're never buying it. So my recommendation is, in your own mind, make a decision. Is this something I plan to own for 5 years? And then if you plan to own it for 5 years, don't stress so much if it goes against you. And if you don't own it for 5 years, decide, is it worth trading at all? Or do I try to wait to try to time it better? I don't know if that answered. I hope it did. But to attach it to Duolingo, when I watched Joseph Carlson, I liked what he shared, even though I say don't listen to anybody on YouTube. But then I watched the quarterly report, and the stock sold off a little bit, but I really loved the CEO and the things he was saying. And he even acknowledged that the street and the market hates his comments about he's not super focused on the profits today. He's much more focused on the amount of subscribers and their daily usage and coming back no matter if they're free subscribers or ones paying for the monthly service. Now, the market hates when a CEO says they're not super concerned about earnings. I liked that because they have something like 200 million people who go to their site every day. And I totally agree with him. If he's able to continue to grow the amount of people going to Duolingo on a consistent basis, because one of the things he said was with all the AI stuff that everybody's saying that the other companies are going to give it out for free, they're so over focused on them being a language company that as long as he builds a subscriber base, maybe they find different avenues and things to do other than just language. So who cares if ChatGPT or Google is offering language for free? And quite honestly, like I played on Duolingo for a bit because I wanted to learn Chinese. My wife and my son and my grandparent, well, my in-laws, not, but they all speak Chinese, so I thought I would learn. The platform is fun, so it like was drawing me back in. The only reason I stopped is they want you to learn how to write it as well, and I'm dyslexic to overshare, and the characters are really tough, and I really just wanted to learn how to speak the language. I wasn't super concerned about learning how to write it, and it kind of forces you to do that, or you don't go to the next level. So that's the only reason I stopped. If it had a way where it would just chat with you and not teach you how to write it as well, I probably would have stuck with it. Now, that being said, currently Duolingo is showing a 15 times PE, which is super cheap. They also have $7.89 a share in earnings. Let me see what ChatGPT has to say too. That was off of E-Trade that's going into their numbers, and let me look at their some of their fundamentals because quite honestly, I, it looks really cheap to me, Lily. Like I don't know. Uh, Please do a stock analysis for DUAL. Oh well. Let's see. Let me take a look at some other things. They have a pretty big short interest at almost 20%. That always worries me. Like why people are doing it, but they're crushing it and they're growing at a pretty high rate. I'm not sure who's shorting it and what they don't like about it, but a PE of a company like Duolingo growing at the rate that it's growing seems like a bargain to me. So it makes me feel a little bit better about the additional shares that I bought. And this is what I was going to say in relation to what David was saying. Nothing has changed in terms of the company, in my opinion. So the fact that I bought the stock at 200 and it's fallen to 122, I try not to pay. First of all, I bought a small enough amount that I'm not super concerned. Like hopefully you see in the video, I'm not super concerned. But the other thing is, I try to really focus on an investment when I'm looking at the company, not the stock price. And I liked all the things the CEO said. I liked the pace that they were growing the company, and none of that has changed. So just because the stock price has changed, to me, it's a little bit of noise. Now, I have separate accounts. I have the ones that I don't watch where I buy something like that and just leave it alone because I like the company. And then I have a small trading account because I'm a degenerate gambler, as I joke with my friend. But because of my background of trading and the fact that I like the action, so I watch the markets and I do try to trade things. But when I bought Duolingo, my attitude was, yeah, I liked what was going on with their growth and everything else. And when I look here, I'm seeing the same thing. Their gross margins are 72%, well, 71.99%, which it's kind of what I love about software companies and computers. I think this AI rhetoric and where they've been going, that a lot of these companies they picture they'll be out of business. I feel like that sell-off has been overdone. I don't know if you watched. I started another channel, Dividend Retirement, because I'm trying to. I like starting things, and it's fun for me. So I get really excited seeing 30 or 40 subscribers, and it being able to grow from there. But I talked about a little bit with some of this stuff too. And recently I bought Adobe yesterday, Adobe CRM and Oracle, just because, my general philosophy is when news is really bad is when you want to be buying things. And to me, the news on Adobe, Salesforce, and Oracle, it just seem and probably whatever you're looking at seems so overdone at this point. Now, it can go a lot further, but I feel like I'm buying things on sale. Now, does that guarantee that I'm going to be profitable on it? No, but I want to buy things on sale. I hope that eventually the negative news dissipates, because what ends up happening is you have sellers and sellers and sellers, and eventually the sellers just get exhausted, and then it kind of sometimes just sits there for a while before it starts going back up. Now, you can have that V move too and everything else, but that's how I feel like the news has gotten so negative on these companies that aren't the mega caps that Adobe makes good earnings. Salesforce has good earnings. Oracle, like, they all make money. Oracle's taken on a lot of debt. Maybe they're have some different things going on, but that negativity just has gotten so overblown to me. And like I said, that doesn't mean it may not have more downside. But I do feel like once it finishes, there's going to be no selling pressure and it'll be able to go back up. So forgive my long rant on it. I hope it connected with her question about Duolingo, because yes, I see the sell orders, but I think these software companies, a lot of them are probably just fine despite the negative news. And I don't think they're all just going to be out of business. So if it's a company that has good earnings, well, and they're growing, I try to pay attention to what's going on today, not the analyst's guess for the future. Because forgive me, they're no better than, I joked in somebody else's video, like they did that comment in a random walk down Wall Street of no better than a monkey, and they've done those random tests, and it wasn't literally a monkey, but the random tests tend to outperform the professional advisors. So let's see what ChatGPT has to say about Duolingo as well. So current price is around 122. It's been really volatile, yes, with the highs above 400. So the thing has fallen more than half. Um, the compression reflects a shift from strong momentum to valuation reevaluation and mixed investor sentiment. So yeah, I think on one hand they've reevaluated the valuation, but I think they have, in my opinion, which is worth very little, have pushed too far to the downside. I really do. Seeing that PE at 15, like, he's talking about getting 20-30% new subscribers every month, not necessarily, or every quarter, not necessarily paid, but that's friggin' incredible. So Duolingo operates a freemium learning platform with revenues from the paid subscriptions, advertising, and in-app purchases. Which is why I say I think that advertising, as long as he keeps driving people to the site, who cares if they're paying? Some of these things, like, my understanding is Netflix makes the most money off of the ones who pay the least, because the advertising is more valuable than the higher paid subscriptions. Duolingo may operate the same way. Um, AI enhanced, so recent growth drivers, AI enhanced learning tools. So they're using AI themselves, expanding content beyond language, which he talked about, the CEO, in the last quarterly report. And that was one of the things I really liked. He was like, we don't even know if we'll end up being a language site or if we'll just find other avenues. Our goal is to build the subscribers, and whatever they gravitate to is fine with us. Um, Financial performance, like, it keeps growing, profitability, high gross margins, strong cash position. So they have over $1 billion in cash. Plus, they have really good free cash flow because their margins are so good. When I go back to E-Trade, their net profit margin is 40%. So I got to tell you, Lily, Duolingo for me looks like a phenomenal company. daily active users growing somewhere between 30 and 50% year over year. So I don't know why the street hates it, um, but they've beat it up really badly. It must be this AI, and they're going to be out of business. Tom, I'll read your question and go into it in a second. I'm just interested in this because Duolingo looks even more attractive than I thought. Like to be in my opinion, um, but they still have some hold and lightweight. And I wouldn't dive all in into something that's such a risky stock. Some bullish targets as high as 500. So let me read the bearish case, not the bullish. So the risk is the valuation. Despite pullback, some argue the stock might still be priced for above average growth, which may be hard to sustain, which makes sense. I mean, they're getting big already. So it's hard to just keep growing at 30 or 50 times. That's pretty optimistic. Growth deceleration, although Spotify crushed it with that stuff. Some signals of slowing growth rates relative to earlier hope or growth, right? Hyper growth. Sorry. Um, AI, large AI. That was what started it. Is when ChatGPT said that they can do this stuff for free, which in the long run it won't be free anyway. Which is why I think that's pretty funny. Um, Super long answer, which is what's nice about not having a zillion people show up. Lily, I love Duolingo. It looks like all the information I'm finding on it really confirms what Joseph Carlson liked about it and what I did. Stock price has just gone down. I was too early, and similar to him, I put in such a small investment. I'm not super concerned it went against me. To be honest, it allowed me to buy a little bit more yesterday or Friday. I don't remember when. So, Tom is asking, do I sell puts on higher dividend stocks? Maybe a good subject for your new channel. Yeah, absolutely. So, yes, I do sell puts. Not typically on dividend stocks because their volatility is generally low. Although, I don't know if you saw the video I did on this channel. Maybe I should do that on the other one too. In my trading account, I sell tons of calls and puts on Conagra, which is like, it sounds so stupid. Like like it makes no sense to me. But when I did the math, because Conagra is such a boring nothing stock that barely moves. But when I started doing the math of the return I could get over a year, now not over, like, I use short term monthly or quarterly options, but on a stock that's only trading, now it's at 1940, but it was trading $17. If I was collecting like 15 cents every month, which wasn't so hard, um, the return on the options was 9%, and they pay an 8% dividend. So if I'm selling a put and getting 9%, and I'm selling a call and getting 9%, and I'm getting an 8% dividend, and if I get taken on the call, the stock has gone higher, and at least so far, Conagra's gone pretty much nowhere. It's just been a way to collect premiums. And when I did the math, it's like a 30% return on a company that just doesn't scare me because it doesn't go anywhere. Now, if I'm looking to buy for my set it and forget it account, and the other channel that I'm working for is going over, I call it dividend retirement, because my goal is to slowly rotate out of the growth stocks, and I've been using calls on those, selling covered calls, to move into things that are paying dividends. Recently, I picked up like Clorox and Procter and Gamble. Well, I don't sell puts on them because really my goal is to own the stock so I can just receive the dividends and live our life and pay our bills off of big, boring dividend companies. So I haven't really been aggressively selling puts because I don't want to not get filled on the stock, if that makes sense. As long as I'm content with the dividend yield and that they're able to pay it, then I'm super comfortable buying the stock and not worrying if I was a little bit early and the stock price dropped. Now, maybe I should look at it for companies that I want to get into that are higher priced than where I think they should be, so that I can collect a dividend of sorts on the puts. But I love selling puts for stocks that I want to buy at lower prices, because it's, to me, it's almost like free money. Same with covered calls, as long as I'm legitimately comfortable selling the stock if it gets there. Now, when I used to trade on the floor, and the information that I think about in terms of the reality of all the things you get when trading an option, it's like the opposite. The algorithms have gotten so incredibly good at this point that it's very hard to beat the markets or do whatever. But so part of me is constantly thinking about the time decay and the this and the that, all the Greeks that are in an option. But the reality is, now that I am off the floor, and I think if I want to buy stock X at 100 and it's trading 110, if I sell a put in it and collect some money, like, that's free money. To me, the only risk I'm taking on, because I've had this argument with my buddy Steve, is if the stock goes below my strike price and then rallies up above it before the expiration of that option, so that I end up not buying the stock. Same on the call side. If I'm willing to sell a stock for $100 and it's trading 90, I see my only risk that it goes and trades 105 and then drops down to, back to 90 before the option would have expired. I could care less if I saw $100 call if the stock's trading $130 by the time the expiration comes about, because I would have sold it at 100 anyway. So I love selling options for that part at this point off the floor. Like, when I think of all the information, the professional traders are generally going to do better than the person off the floor. But I'm only selling puts and calls. I don't buy them. I'm not trying to make a guess where a stock is going to go. I don't buy puts as insurance the way that some people would think about it. I simply would sell calls and I would sell puts, and I think of it like, well, I'll collect the 50 cents or $1 in the meantime. And sometimes on some stocks, like, I'll sell a 1 year out call for really little money if I see something like, what was it? Boeing had this random bid on a $350 call, and it was only like 20 or 30 cents, but there was just no way it was going to happen. And to me, same thing, like, it's free money. I'm not going to turn away, even though it's only $30 or whatever it was. And then, long answer, like, yeah, I like selling puts. Um, I generally am doing it on non-dividend stocks, other than a few. But I think it's a great way to enter a trade if you want to pick something up. Let's see if I see anything interesting. Netflix is and Warner Brothers has been in the news a lot. It's kind of funny. Netflix is another one that the negativity seems a little done to me too. Forgive me, I'm gonna have. Sorry, my throat's getting dry. I can hear it. It's funny. We bought this Ninja Lux coffee maker, and now I feel like I'm like this home barista. And not only that, for like, this is not like, they have nothing to do with nothing. But this thing is so good, like, I can barely drink out of a Keurig anymore. It's more work, but man, it is so good. Oh, okay, cool, Lily. I'll tell you about what my thoughts on Netflix. But this thing, like, it grinds like to each coffee that you make, and then you can do just regular drip coffee, or you can make espresso. And I got this, like, caramel flavoring, and I put a little salt in, so I have this salted caramel. Anyway, it's a great little machine, and I buy it because I'm so cheap. Like, I'm not going to the store. I'm not going to pay $5 or whatever it is for Starbucks, when I can buy 3 pounds of coffee beans at Costco for $20 that'll last however long. And I love coffee anyway. Whatever. Off subject. So let's take a look at Netflix because that's one of the ones I've been picking up as it's been falling. So, full disclosure, it is a company I own. I do worry about the valuation. They're talking about it on CNBC still because it's actually got at a 32 times earnings. What I love about Netflix though is, to me, they are just the top in their space. Like, the funny thing is, when Netflix fell from, like, what was it, like $1,000 a share to 100 pre-split, and nobody liked it. I was one of those nobodies. I see. I'm a nobody. Like I said, don't listen to me. Do your own research. Uh, it made no sense to me. Like, why wouldn't Google or Amazon or Apple or I guess Disney just crush them? Like, especially the big mega caps. Why would not Amazon take Amazon Prime, put some real money in it, have great content, and crush a company like Netflix? Well, the fact is, they didn't. I didn't understand it back then. I thought they would. And the fact that they didn't, now Netflix is it. Like, as far as I'm concerned, they're the best one. It's like owning McDonald's if you wanted to own fast food companies, or Amazon if you wanted to own retail. I want to own the top company in a space. And as far as I'm concerned, at this point, Netflix is better than owning a cable company. And they've got their different platforms. And if they actually are the ones that get Warner Brother Discovery, which I'm beginning to wonder if they will or not, but if they do, that really rounds out the company pretty good, where they've got that whole history of like Batman and Harry Potter and these other great franchises to add to their content. And Amazon and Google and Apple have not done a good job to compete with them. I mean, maybe they're too busy on their other aspects of their business, but it's given Amazon an opportunity, or Netflix an opportunity, to be what they are, which is top in that space, and I don't see that changing. So even if you end up overpaying for Netflix, to me, it's just something I kind of want in my portfolio at this point because I think they're the best of the best. Now, 30 times PE is not so cheap, especially considering how far it's fallen. Um, Let me take a look a little bit. And I think they just reported recently. I think it's not for a while that they report. Yeah, April's the next time. And let's see what ChatGPT has to say as well. But I'm looking at the numbers in E-Trade, and let's see. Please do a stock. Let's do just cut and paste this one and change it from. Sorry, I'm getting blind in my old age. I can see normal from a distance, but do this and change it to NFLX. And also understand, like I commented in another video, doing all the numbers and looking at it gives me warm and fuzzies, but I gotta tell you, it's probably somewhat useless. Um, I think you buy great companies when they are out of favor. Wow, Netflix has a short interest of almost 17%. That's interesting. And I'm guessing they just think it's overvalued. I don't think it's that they don't think it's a good company, because really, I think they're a great company. PE ratio is still higher than 63%, which means people are paying up for it, but I think they're paying up for it because they're a great company. Gross margins 24%. So that was one of the concerns, is with buying Warner Brothers Discovery right now, Netflix is just online. So they don't have much overhead. They have really good margins. By buying Warner Brothers and taking over the studios and everything, while I love that because it creates an opportunity that they can make more of their own content, and it actually opens up doors, in my opinion, the concern about from the street is now they're taking on debt that they didn't used to have. I still think having all those franchises and the studios allows them to, like, if they wanted to do movies in real theaters, it would be legit. Like, it opens the door more than I think they're making about taking on this debt, and maybe that's why the short interest is there. I also think that it just allows them to do so much more. Like, I love the idea of them getting into that space. I understand the concern, but they have enough money coming in that they can afford the debt, which is why they made the offer. Like, I'm guessing they see all the things that I see, and maybe the street is right about their analysis of why would you take on monthly expenses and debt when you have this perfect company that just does content online. I get it. I'm totally for it, and I hope it goes through. There's been more talk that maybe they won't be able to take on that content because they are too much of it. So let's see what ChatGPT has to say. Has been volatile because of the blah blah blah. Subscription growth over 325 million global subscribers. So that's pretty cool. Um, Ad sales grew 2.5 times. So that's why I said that lowest tier is probably the most valuable for them. And then when they've added the live and the other stuff, they've had really good results with that when they've done football and boxing and other things. So revenue is up 16 to 17% year over year. If they get the Warner Brothers end of stuff, I'm guessing that'll slow a bit, but I still think that's okay. That's why I said you're paying 32 times earnings, growing at 16, 17%. I think that's fair. It's not the greatest deal ever. It's not the bargain of the century. Like, think of the numbers for Duolingo, but Netflix is much more stable, and it's a company I want to own. And if I'm paying fair value, that's great. So profitability, strong net and operating margins, have healthy free cash flow. Um, they're robust free cash flow. So everything is good other than the valuation. Let's go and see what their negative comments are. Bearish view. Slowing subscriber growth, which doesn't surprise me, other than that they're worldwide. Like, they should be able to expand anywhere. If you go out of the country, Netflix is able to be there. It's a so they don't have to just do U.S. sales. Um, but I'm sure their subscriber growth is slowing. They're huge at this point. Leverage risk from the strategic merger and acquisitions, which I think that's what's the real pressure. And regulatory uncertainties could limit near-term upside potential. I think that's the real risk: is they're spending too much, they're taking on debt, and there could be regulatory, like it could get turned down because they don't want them to be too big a percentage of the streaming world. Um, some DCF models suggest Netflix is near fair value at current levels with only modest premium. Yeah, kind of what I said. Still a company I'd want to own. I think if you're buying it at fair price and you're owning Netflix, I think that's a pretty strong company to add to your portfolio. I mean, I don't know. So Lily, so far I like both of your picks. Surprisingly, Duolingo's probably like I said, it's just such a small company. Have a great day. If you guys can hear me, I'm not 100% sure. Like, the video, I can see it again, but I know that the Wi-Fi, it lost connection or something. So have a great day if you guys can hear me, and I'll see you guys next week. I'm sure I'll post on both the channels. Bye bye now.